welcome to ICICIdirect. Joining us today is a very special guest, Gaurab Parija, Head of Sales at IDFC AMC, who will be presenting their new passive fund, IDFC Nifty 100 Index Fund, where you can access India's largest companies under one roof. Gaurab, thank you for joining us today.
Thank you, Samina, and thanks ICICIdirect and Securities for having us back again, especially giving us an opportunity to talk about the passive funds.
Gaurab, before we get into details of IDFC Nifty 100 Index Funds, can you share the benefits with our viewers about index investing?
Sure. Like many of you would be aware, and for the beginners into the world of index investing, index fund is basically a fund which replicates the underlying stocks in a particular index. For a plain, simple index fund, it replicates the stocks in the same weightage and the stocks. There are variants of index funds which we will not discuss in this show, and we can pick it up later. The advantages of investing in an index fund is, for every investor, there are four things he or she looks for in a particular investment. Firstly, she looks at diversification. Secondly, we look at the fact that is it affordable. Third, from a cost perspective, it is important to have lowest cost as possible. And lastly, many an investor like me who looks at simplicity. Now, an index fund, given the way it invests, pretty much meets all of the four. From a diversification perspective, given that it replicates the Nifty 100 index in this instance, it invests across 100 companies. Affordability, you can start investing in this fund for as low as rupees 100 in SIP or rupees 5,000 for a lump sum. Low cost, given that index funds do not have active fund management and replicate the underlying index, the costs typically are on the lower side compared to active funds. And lastly, simplicity, because you just tap into ICICIdirect, click one or two buttons, and lo and behold, you bought into an index fund.
Gaurab, let's now talk about the IDFC Nifty 100 Index Fund specifically. What are the benefits of this one?
Thanks. I think as the name states, this is the Nifty 100 Index Fund. It invests into the 100 largest companies by market capitalization. It is the closest proxy to the large cap category as set out by the regulator. Given that these are the 100 largest companies, the diversification is across major sectors like financial services, IT, oil and gas, consumer goods. The interesting aspect of this index is that it's been in inception since 1st December 2005 and has a significantly long track record, which is relevant for any investor to look at before making an investment choice.
Thanks for that, Gaurab. To add to this, the Nifty 100 companies provide combined exposure of 77% of the market cap of all listed companies. So, Gaurab, can we say that then the Nifty 100 Index Fund is one fund that can meet the needs of all different investor segments?
I mean, I won't say that it addresses all investor needs. We've tried to, when we are putting together the fund proposition, looked at various investor needs, but our belief is that caters to most of the investor needs. So to give an example, we've looked at four types of investors. We've said there could be a potential beginner who is an investor. There could be an investor who is informed. There could be an investor who is experienced, and a retiree. And let me quickly explain each of the categories. Now, a beginner for us is someone who is trying to take baby steps into the world of equity investing, pretty much doesn't know anything about investing into equities. An informed investor is a person like you and me who understands the potential of equities and is comfortable of the idea with investing in equity. An experienced is one more evolved step where the person not only understands the benefits of investing in equities, but pretty much has the time and competency to do it by himself or herself. And lastly, the segment we've looked at is someone who is about to retire or has retired, and hence bucketed him in the retiral space or called him a retiree. Now, when you look at the Nifty 100, we believe it caters to all the four. Now, let me again start with a beginner. Now, what does a beginner into the world of equity investing want? A, like I stated, he wants diversification, simplicity, convenience, and affordability. Two, given that he's investing and coming into the world of equities, he doesn't want a highly volatile experience in the initial stages. And that's why we believe the exposure into Nifty 100, which predominantly invests into the large cap companies in the market, will give him a very smooth entry into the world of investing in equity and avoid all the volatility attached with investing in other segments of the market. Moving on to the informed investor. Now, an informed investor, like I said, are people like you and me. We understand the benefits of equity. We understand the potential of long-term investing in equity. But our work and profession may not give us the requisite time to allocate in trying to time the markets, get in, get out. And hence, we would tend to fall back on a strategy which helps us do all of that. And that's where the Nifty 100 comes in, because clearly, as we've demonstrated, it is very difficult to predict which part of the market will give you the best returns over the coming years. In a phase where the top 50 companies do well, the Nifty 50 tends to do well. In a phase where the bottom 50 companies tend to do well, the Nifty next 50 tends to do well.
Right.
And if you are trying to guess the market, it's going to be a tough job. And this is what also comes in handy for an experienced investor. Now, an experienced investor obviously has started and created multiple sleeves in his portfolio. And the sleeve we want the Nifty 100 to take up is the sleeve of the passive large cap space. And lastly, for a retiree and retiral person who is about to retire, there is a clear need to have an investment in an asset class which will beat inflation over the long run. An ability of the asset class to give him regular income over the coming days, but yet not get him to face the vagaries of a very volatile movement in the underlying portfolio. And that is again where the Nifty 100 comes in handy.
Gaurab, thanks for that. Can you also now help our investors and viewers understand how the index has performed in the past? Sure.
I think, like I mentioned, the index has had a very long track record from 2005 and 6. It's important to note that the last 2 years have been phenomenal. So I will put a little bit of a caveat and caution for investors not to look at the last 1 or 2 years returns and hope and believe that that will continue. But if you have to look at the index returns of the Nifty 100 for the last 3 years, over the last 3, 5, and 10 years rolling, the average returns have been in the range of 11.8, going all the way up to 13.44 over 10 years.
Right.
Now, if you had also looked at doing a SIP in this fund, the returns have been exceedingly good over this period, ranging from 25% over 3 years. And again, I would like to build in a little bit of a caution. A lot of the returns which is coming through is because of the last 2 years of super performance in the market. But even on a 10-year period, the SIP returns is a very healthy 15.4% CAGR.
Right. Thank you for that, Gaurab. It was great talking to you. I would like to once again reiterate that the new fund offer period for IDFC Nifty 100 Index Fund opens on Monday, the 7th of February, 2022, and closes in on Friday, the 18th of February, 2022. Post that, the fund will reopen for investing on the 25th of Feb, 2022. So with that, thank you, Gaurab, for your time and for telling our viewers everything they need to know about the IDFC Nifty 100 Index Fund.
Thank you. Thank you once again for giving us an opportunity to be part of the show.
Please note, mutual funds related services are not exchange traded products, and ICICI Securities is just acting as a distributor to solicit mutual funds. All dispute with respect to distribution activity would not have access to exchange investor redressal forum or arbitration mechanism. Mutual fund investments are subject to market risk. Read all scheme related documents carefully. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from ICICI Direct.